Hey everybody, this is David Skrika, little Michael Hutchins there. I'm in Barcelona, but we're going to go look at the stocks here and going to get right into this because what's been happening is, I'm staying with my father. I start talking, then he comes into the room, and then I stop recording. So, no point right now. He's at the pool. Living in the Bahamas, being near the ocean and pools and all that kind of stuff all the time. Going to the pool here doesn't, and I'm really spoiled. I'm not gonna act like I'm hard done by here, but I'm just so used to where I live in the Bahamas. It's like, there's no people. Like it's very, sparsely populated, and it's just like, going to a pool, where I live, um, or like the beach, no one's on it. So that kind of thing, like, walking around the streets here, going to cafes, going to great restaurants, that kind of stuff interests me. But I have to say, like, hanging out at the pool or the beach doesn't really interest me here because I have that in the Bahamas, and I have it, in my opinion, like in a better way. Not that like the pool at the hotel isn't nice. There was I'll send it. I'll focus a picture. Like the first hotel we were at. The second hotel is actually a nicer hotel, but the first hotel had this amazing pool that like had overlooked the city and the Mediterranean and everything. So anyhow, I'm drinking actually a black tea right now with this. So, okay, so this is our looking at the market. The market was up a lot on Friday. So what I decided to do, I'm getting out of the Nvidia short for now. By the way, what's going to be really interesting, I don't know. Like, look, if you go look at Nvidia, hasn't had a significant rally since March. This is a favorite. I actually, at this point, now that I'm recommending you sell, I would actually hope Nvidia could bounce to 190 or something like that, for an entry short position. Actually, there are actually short funds starting. I don't know if it will show up yet. No, they haven't started. Yeah, right here, like that are bearish Nvidia. This is just started trading 2 days ago. So this is great. I don't know if there's gonna be options on these because we could buy calls on these instead of puts on Nvidia. But the fact that Tesla and Nvidia now have these bear ETFs, they're traded for 2-3 days is fantastic. Because, if you're someone who doesn't want to do options or it doesn't want to actually out and out short, you can buy these inverse ETFs that essentially just trade the stock. You can see this pretty liquid. Like there was 300,000 shares traded on the Tesla Q, and NVDS had, that's not overly liquid, 4,000, but if you're just looking to do a few $1,000s as a hedge, you're talking like 100 shares would be 4,700. So that's more than liquid for a smaller investor. So that is like fantastic in my opinion. So, and the other ones I'm just going to hope, as I've kind of expected, Home Capital Group, you can see right at the lows. This is my favorite short. I just don't see Canadian housing, surviving these higher rates, higher costs, etc. Right? We've seen a bit of the bond, but like, look at this is exactly like why not to get too excited about any of these rallies in the stock market. And you can see ever since the bonds peaked late last year, look at a little bounce here, 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 and you can see the RSI is now no longer undersold. It's actually getting close to oversold. And you can see that right there. You can see what's going on there in the market. So I was in this. So this is the kind of thing about the stock market is you're going to have these little bounces on the way down. Actually, one thing that's really interesting that Mike Swanson actually posted. Mike Swanson posted to me or recommended to me was that if we go look at like the 1929 or 1920 to 1921 bear market, which is similar today in that a world war just happened. Obviously, we have another world war, but we did have a pandemic, and actually the market peaked right at the end of pandemic, even though they weren't doing a huge amount of stimulus then. And the Federal Reserve got really aggressive in raising interest rates because inflation. Actually, this was the highest inflation of roughly the last 100 years. The 19 teens is higher than both the 40s and the 70s in inflation. And you can see the bear market began kind of late 1919 and lasted almost 2 years. The majority happened in the first year. This is kind of what I think we're doing. I think the majority of the price declines are still going to happen within the next 6 months. And then next year could be like kind of a more bottoming or like a more grinding sideways kind of market before a bull market starts again. and you can see the market lost 50% of its value, and really 60 to 70% if you factor in inflation. And by 21, 22, there was actually deflation, and then the Fed began to cut rates and everything came up. But we can see, like, that would mean right now, I think this would be the equivalent of the rally we saw. We're in one of these kind of rallies right now. You can see, and look, they don't look like much, but they, this one began in May and ended in July. It's 2 months. This one began in August and lasted about a month and a half into mid-September. So you can see these rallies lasted, they may not have been huge on the percentage move, but they lasted a month or 2 months. So we could be seeing that kind of rally now, but it's very similar in that, we just came out of a pandemic because of the supply chain issues. Out of the pandemic, it's inflationary, and then the Fed is aggressively raising rates. So I think, like I said, if you look at here, like this late 1920 bottom, which I think we can make that kind of low within, again, the next 6 to 9 months, was almost as low as the absolute low in August, or like, late 1921. So this is why I keep telling people too, as well. I think that after, if the S&P say falls to 2,500, I'm kind of out on the shorts. If you look at it this way, we're about 1,000 points off the lows. That would be another 1,000 to, to 1,300 points from here. And I just kind of be out then, and I just be looking for bargains. And I think, I'm going to do, when I do launch it, I'm going to have a list of value stocks for you. One of them, I've talked about some of these, but I think TKC, one is you might want to start picking away here. TO, which is the Argentinian car, you can see it's actually kind of broken down. Like if TO could really break down, here, you can see maybe it goes back to the 2008 lows is 250. This would mean an out and out, hyperinflationary crisis again if TO got back to 50 cents. But if you could get dollars or something on this, it would be an absolute, great play, because you can see, these highs in TO here are $15, $20. This one went over to 30. So not only will you get a 5, 10 times on your return, you're going to get great dividends. And let's go look at TKC as well. Yeah, this is, and I own a tiny position in this. I think about around 350 I bought it. And it did bounce to almost 4, but it's a very tiny position. It was kind of like toe in the water position. And it's more like, if you own a couple $1,000s or something, if you lose 30, 40%, it's on your screen every time you log in your account. So it keeps it kind of in your mind. So I like to do that, even if it means on paper, I lose a tiny bit of money, if it's just like a couple $1,000 position or something. So this is what I'm looking at here. But again, yeah, like 2002, 2003 lows would be absolutely great in TKC. And you see again in 07, 08, they got up to 15, but even if it got back to the highs of like, I don't know, 2018, when it got to 8, it gets to $1 or $2, you're talking 4 to 8 times return plus a big dividend, and of course, another one with Petrobras plays a huge dividend as well. But I want this to come kind of down more. We just bounced off the 200-day moving average. But again, if we can kind of get, I don't think we'll go this slow. No, this oil was negative, but if you could get to $5, $6, I think that's realistic. Kind of draw a trend line here, get about $5, $6 on a decline in the markets in oil in the next 6 to 9 months. I think that's a great trade as well, so anyhow, so that's basically it there as well. So again, let's go look at the S&P just quickly. Yeah, we look at this here, I could see us maybe breaking through this resistance. I don't know, maybe we're just stopping, but maybe see a little rally up to 4,000, something like that. I'm keeping all the rest of my shorts because they're longer term out. And you can see, if you kind of draw like here, that would be about the trend line as well, So anyhow, anyhow, that's basically it as well. The Dow as well. Yeah, and actually, if you go look again, remember the last video I talked about the similarities of 2008. Well, let's go look at the 2008 chart, for example, on the S&P, and what you'll see is, the 2008 charts. 1 second, let me go look at here. Sorry, I got someone writing me on my phone, so I'm just going to put that on airplane mode so I don't get those interruptions. Yeah. So anyhow, so if we go look at the 2008 chart. Yeah, and we're going to end it at the end of 2008, so we can see the crash too. Of the S&P, and I talked about the July, like the kind of mid-July bottom here, and then it kind of rallied into early August and then kind of slowly went down. I could see that kind of thing coming as well. Like, I know they're going to do 75 basis points, but maybe when it becomes obvious, once everyone kind of comes back from their holidays around Labor Day, that the Fed is probably going to do a couple more hikes as well. That the S&P could really move down. Nothing's going to be exactly the same, but I've kept waiting. A lot of times these declines will end in October, November. So maybe that will be as well. So this is interesting. This is the 3-month Treasury bill. So this is basically telling us, it's already way above. Right now rates are 150 to 175. So about here, this is already 60, 70 basis points above us. So it's telling us that the next interest rate hike is probably going to be at least 75. And as I've said over and over again, the 2-year Treasury yield has, still at its highs, 3.13. That tells me, again, the Fed funds rate will end up around 3% at the moment, unless this even goes higher. So 3% again is still another roughly, depending on what you use, the 150 or 175, 125 to 150 basis points. So and that's what I think is going to happen. I think we could see 2 75 basis point rate hikes in end of July and September, which would bring us to this level. And then all bets would be off if this doesn't go higher. Then that's when you could see the pivot. And one reason you could see the pivot is, we've talked about, what's happened with crude. Like crude has now come off. You can see it's right at the moving average. It could bounce here, but if it breaks this, then we could be a scenario again, like 2008, where commodities all kind of fell into the fall. I don't think they're going to fall that low, but I would look at, again, this 70 to 80 area as kind of the support, and then if that would occur, that would also alleviate some pressures on the Fed. And even stuff like wheat, and I didn't think wheat would fall this much because of everything going on in Russia, but you can see is basically back to where it was pre-invasion. It's still a higher type price, and I still think there's issues with fertilizer and these kind of supply issues, but I definitely think that, you were looking at this and we're seeing some alleviation. And I think when it comes to inflation, people really don't take into account monetary policy enough. Higher rates, the Fed's reducing the size of the balance sheet. These are all having effects. People think I'm an inflationista, meaning I'm someone who always believes in inflation, but I'm actually not that, I'm kind of more bearish on inflation here because, it's interesting too. We've seen this inflation spike with the dollar going up. And the reason I'm not as bearish I'm kind of more bearish on inflation. I don't think it's deflation. I call it disinflation or short-term, or deleveraging. I think it's more of a deleveraging, but is because of these factors going on in the monetary kind of environment. So I think I'll show you gold here. You can see the gold stocks kind of maybe showing a little sign. They're very oversold. RSI is at 30. So I think we could see a little bounce here. But again, I'm kind of reluctant. If you want to put, again, your toe in the water, you like a company, like I've seen that Ego, Eldorado, which is a company I've always liked. Has really gotten whacked here, almost back to the 2020 lows. If you wanted to buy something of this nature, the seniors are really, really cheap. Like if we go look at the GDX to GLD ratio, so basic gold stocks to gold, you can see one of the lowest ratios. Well, let's go back 10 years. Getting back again towards that kind of 2018, 2020 level, getting back to not quite a 2015, 2016 yet, but getting back to where gold stocks are getting very cheap compared to the price of gold. And of course, if we go juniors, the CDNX, again, basically other than the panic during 2020, as cheap as they've been in the last 10 years. So things you might want to pick, you definitely might want to pick away. One of my Nevada King, there you can see very cheap here, down to 30 cents. This is an excellent company. You got large land holdings, in Nevada, obviously. I've talked about Inca One in the past, 22, 23 cents. These are kind of things I don't think, they could go drift a little lower. Actually, one I really like is Euro Sun. Oops, there's the American, so for you Americans, it's CPN FF, but I prefer the down to 10 cents. This is an all-time low. This is a near production mine. It's in Romania, so maybe the issues in Eastern Europe with the Ukraine war are really having an effect on this on top of everything. So this is the type of company, once they get into production and have cash flow could easily be $1. So like these are the kind of opportunities we're getting here. And I remember Avion Gold, which had one of Nevsun's old property in Mali, in Africa, that went from 6 cents to $2 when the eventual turn came. So we're kind of in the summer. It's kind of low volume in these juniors. Another one I like here is this is one I haven't really talked about. Actually, they don't even have a, but it's RMES. I'll get it. It's a red metal. Yeah, 8 cents is a nice little copper play in South America. So like you have these things like this, and it's just like, they just announced that some results from the drill program. No one really cares right now. Yeah, these are the kind of things I think you can pick away at, and if you want, kind of forget about, because and then add some more. So $4.3 million market cap. So these are the kind of opportunities you're getting. And like the thing about juniors is, I really think this, one reason I haven't really done a lot of private placements in the last 6 months or so is that I had the feeling with the Fed raising rates, it wouldn't be the greatest market in them. I still own some positions, unfortunately, in some regards, because some of them have gone down. But this is, I think, the time you want to start looking. When we bought, for example, when we bought Aftermath Silver in 2019, right before the spike, when juniors were cheap like this again, we saw that go from 8 cents to $1.50. So now we're going to get this. Now, I don't know if they'll do much to the rest of the year. We only really have 5 months left year. Some tax loss selling is probably going to hit this fall. But I would think that if the Fed kind of stops with the raising rates late this year, early next year, and we're going to see, remember, the year over year comparisons for inflation are going to be a lot easier. Like the perfect example is, let's go look at the CRB index, right? We look at the CRB index, you can see it's fallen, pretty heavily off the highs. But if we go look at the year over year comparisons, yeah, next year we're going to be comparing the CRB to here rather than down here or down here, which is what you got 2020 to 2021 or 2021 to here. So the comparisons are going to be easier. So that's kind of what happened in 75, 76 before the next surge in the late 70s, that the next 2 years we'll probably see, this kind of slowdown in inflation, maybe to half of where we are today, to 4%, 3%. And then it'll probably pick up again, because when that downturn happens, they'll loosen monetary policy and assets will go up. And then you'll see this next surge. I think the next surge is going to be the real surge, because where the government debt levels are and where debt levels are, that you won't just be able to blame it on the pandemic or supply chain issues. I think you're going to see them really have to inflate away a lot of that debt. So anyhow, I thought I would leave it at that, yeah. So, yeah, I guess I will just leave it at that. And yeah, like I said, I wanted to give you a brief overview. Oh yeah, and with the promotion, I just decided, I'm on vacation. I haven't seen my family in almost 3 years. My brother's at the Barcelona football camp. I actually will send you a nice little video of him scoring a goal. We got to watch a couple hours of the training session. And I'm going to actually up all the training session to the YouTube. I'm doing that more for like family, friends, but you can watch it if you want. But yeah, just this, I don't really rush the promotion. I won't have the amount of content I should have over the next 2 weeks. So August 1st is kind of the Monday I'll be back. I think I'm coming back the 28th or so of July to Bahamas. So I'll have 3 or 4 days to get more content together, get everything together. It's only 2 weeks away. So I think we'll do that. And then we'll have content. I'll be pumping out content like crazy, in July and August. In August and September. So yeah, we will do that. And yeah, so I'll start it then. And I'm also starting an elite service. So those of you who have lifetime subscriptions already, this will only be $1,000 for the year for you. And regularly it's actually going to be $5,000, but I'm going to start a discount at $2,500 a year. So elite service will be more like, you can contact me anytime. I'll give you my personal information, numbers, etc. You can contact me daily, ask questions daily. I'll do like a little Zoom podcast or video cast with the elite members, maybe once or even twice a week. And yeah, we'll be in almost constant contact for that. And obviously I still ask you to respect my privacy or something, but yeah, we will do that with the elite service. You'll need to get WhatsApp if that's okay. It's the easiest way, or Telegram. Those would be the easiest ways for me to contact you. So yeah, like I said, if you're already on the lifetime subscription, I'll have that for $1,000 a year. And if you're not on the lifetime subscription, well, if you do get on the, what I'll do is for the 2,500, I'll give you that elite for a year, and then you have the option after the first year. You can decide, well, do I want to renew the elite at $1,000 a year, or do I want to just use that, whatever the lifetime subscription for just the regular service. And that's what we'll do. So and I'll still have the platinum subscription. The platinum subscription is a little watered down to the elite, where you can ask me a question once every week or two. I'll blast out the trade alerts. But in the elite 2, by the way, I'm really going to restrict to probably 40 people. I really don't. I don't need to be talking to hundreds of people. Obviously, the money would be great with hundreds of people, but I'm going to restrict it to 40 people. So this isn't making me rich too. 2,500 a year at 40 people is $100,000 a year. It's a nice income, but it's not especially with inflation these days, it's not nothing I'm going to retire on. But anyhow, that's what I'm going to do. And then what would happen with that elite service, if I do hit that 40, I won't be selling any new memberships. And then when somebody drops out, I would just replace them, ultimately. So I'll give you more details on that as well. So we're going to have elite, platinum, regular, and then the Patreon service. That's what we're going to have. So, and by the way, in terms of payment, if some of you don't want to do wires, or some of you don't like ClickBank, I have all of these levels set up on Patreon, so you can just sign up that way as well. I know it's a bit of a pain in the ass to do wires, but I really prefer wires because it goes right to my bank account. I can give these discounts with the wires because, there's no fees. We're not sharing it, because I am offshore. I legally do not pay income tax. So I don't have to, account for all of this stuff. There's no third party taking a percentage of it. So I know it can be a bit of a pain for you to do a wire, especially from North America. And it's the wiring stuff with the, the SWIFT codes and bank accounts and all that stuff is confusing at times. But anyhow, if you do that, that would be great. But anyhow, the next 2 weeks, we're just going to have these videos like this, some podcasts. I'm going to San Sebastian, which is this beautiful city in the Basque area. It's about an hour flight from Barcelona. I'm going there tomorrow with some friends. Actually, I'm going to do some videos. It's a couple of girls that are friends of mine, very young girls. Don't worry. They're just their models are going to kind of help me with some marketing of some of my services. And also, too, what I'm going to start doing on the stories on YouTube, I'm going to start uploading my food videos. So I'll probably edit them all when I get back home. I'll edit them all together into one long video. But you'll see some of the food videos, some of the stuff I'm doing. I'm sorry they're a little bit, I guess, not professional, amateurish, because this is the first time I've done stuff like this. But you got to start somewhere, right? Okay, so everybody take care, and I hope you enjoyed this little video on the markets.